In Islam, it is still unacceptable to place interest on loans and to make money from money. The Quran is very clear about this. Those who take riba shall be raised like those who have been driven to madness by the touch of the devil. There is very, very tough admonitions in the Quran against the making of money from money. It expressly prohibits the concentration of wealth in the hands of the few. Hoarding is unacceptable, waste is unacceptable, extravagant consumption is unacceptable, and miserliness is unacceptable in Islam. Now, this is not to say that within Islamic cultures there hasn't been the use of interest. This is not to say that there aren't Islamic bankers. They make money from money in much the same way as Western bankers make money from money. But it is still the case in Islamic communities that if that's how you get rich, it's not acceptable. But central to the principle of Islamic banking is a principle that is in quite opposition to what Adam Smith and Kelvin argued, which is that no one is entitled to any addition to the principal sum if he does not share in the risks involved. In other words, in Islamic banking, if you lend, you have to share in the risk. You have to share in the risk of losses. If the business goes bust, you, the lender, lose. And that is given. And whereas in our system, if the business goes bust, you can gain. You can make more money. My mission in life at the moment is to encourage the church and to encourage churches to reintroduce the sin of usury. It's one of the most unfashionable sins there is. It is something that's not talked about because we have forgotten about the sin of usury. And in my book, I redefine usury as the practice of exalting money values over human and environmental values, of creating money at no cost and lending at rates of interest intended not to foster and maintain humanity, but to accumulate reserves, to extract wealth from the productive sector, to extract wealth from those who lack wealth, the assetless, and to transfer this to those already with assets. And I wanted to show you this number, which is $7 trillion. Now, the reason why this number is important is that it's the amount of money that the central banks of the world have found to bail out the banking system. I'm talking about the German central bank, the Japanese, the Bank of England, and the Federal Reserve have found that amount of money, seemingly out of nowhere, to bail out the banks. Now, when I talk to people about $7 trillion, they have no idea what I'm talking about. None of us can imagine it. Unfortunately, some guy has actually shown us what it looks like. So this is what $10,000 looks like. This is what $1 million looks like, 100 packets of 10,000 in a little brick of that size. And then this is what $100 million look like when you put all the bricks together. And this is what $1 billion looks like. That's an awful lot of dollars. But look at this. This is what $1 trillion looks like. Can you see the man in the picture? Now imagine that's 7 times that amount is the money that was found seemingly from nowhere to finance and bail out banks who'd made very, very stupid errors and had engaged in speculation and gambling. Recently, Bernanke, who's the governor of the Federal Reserve, was on television and he was asked, where did you get this money from? Did you tax people for this money? Where did it come from? Was it somebody's savings? And he said, it's not tax money. The banks have accounts, and I want you to read this very carefully. Banks have accounts with the Federal Reserve, much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed.